the African consumer, what are they buying?
They're buying a lot. It's you know, what we're seeing is what used to be an oxymoron. The African consumer is now clearly reality on the continent, and I think companies such as First National Bank, MasterCard are chasing that growth, where we see high growth figures coming out of African economies, or perhaps even sub-regions across boundaries perhaps. We spoke yesterday at a function of the JSE talking about the sort of Namgolan economy, Namibia, Angola. So it's not just country specific, it's also regional specific. But I think it's a question of increasingly as companies positioning to sell services, sell products to real African consumer spending. This is one of the few continents, one of the few regions in the world with very strong, robust growth, and companies in search of yield could do a lot worse than coming to this part of the world.
Of course, Anna, we are starting from a low base then with the African consumer. So are you aiming, or are companies aiming essential items at them? Are we talking luxury goods? Are we talking staples?
It's quite interesting. We've recently done a survey across the African market looking at South Africa, Nigeria, Morocco and Kenya, and they're quite varied. So in Nigeria and Kenya, you're seeing a lot of spend on education, continuing tuition, but in Kenya also consumer electronics coming very high on the list. South Africa, people more interested in fashion accessories, dining, and again consumer electronics. So you can see that actually it's not just the bottom of the pyramid stuff that's gaining interest.
So Yolande, as you target markets in Africa, do you really have to do it on a case-by-case basis?
I think so, yes. When we look at the different economies, different cultures, different languages, we have to adapt that based on the country that we go to. What we have seen is very much an increase in digital consumers. I think with the mobile phones and mobile money and the increase of that, we're seeing a very exciting market for us.
Well, you mentioned mobile money. Martyn, access to finance and access to banking, because that's something that's been on the agenda for decades, that just isn't that access to banking. Are they starting to gain traction with that, and particularly with things like mobile money?
Well, I think the challenge is, again, you know, it's the lack of progress around regional harmonization of capital markets, particularly so the underbanked communities in Africa. I think, you know, something which is very important, which Yolande we spoke about yesterday, was about leapfrogging technologies. You have the mobile phone, which now we have more mobile phone subscribers in Africa. The United States has population. So there's new mechanisms to which to provide, away from the traditional bricks and mortar type banking or financial services, but start to provide or access the African consumer through a simple device like a cell phone.
Well then, Anna, how do card issuers like MasterCard get in the action if we are looking at mobile money and cell phone banking and things? Is there a place for MasterCard within that?
Yes, so MasterCard's more than just credit cards. We're really an electronic payments company, so like a network where we connect consumers, merchants and financial institutions. So actually the electronic payment that sits under mobile payments, that's exactly our sweet spot. So it's a perfect and fantastic opportunity for us. And I think with 1 billion consumers due to be in Africa in the next 6 years, and a very young consumer base, so within sub-Saharan Africa, 40% will be in the youth market under the age of 14. Huge opportunity for people adopting new technologies and, as you said, leapfrogging and starting new ways of payments and new ways of engaging in the banking system.
And what's some of the challenges that companies face going in there? Because I should imagine infrastructure must be one of those challenges for you, Yolande.
I think infrastructure is one of them. Another big challenge for us is the fact that such a large part of the economy is informal or cash-based. And I don't think we're going to dramatically change that. So we have to work with that in terms of turning cash into electronic cash and then fitting into payment networks such as MasterCards.
And is this particularly in rural areas you're talking about cash-based economies?
No, anywhere. I think if you go into urban Africa or rural Africa, cash is still king.
Even in Europe, 50% of transactions are carried out via cash, and in Africa you're looking around 90%.
And how do you change those attitudes, Anna?
It's very interesting. There's different pain points that people have that you need to address, and one could be about safety and security. So rather than putting my money on a bus to send it home to Zimbabwe, is there a safer and secure way that I can move money across borders where the natural leakage that could potentially occur won't happen? So it's looking for those pain points. We were talking a lot about this yesterday. What are the consumer pain points? What makes life difficult? And then how can an electronic payment help? Otherwise, why would I not move? Why would I stay with cash?
Martyn, what's the competition like for the African consumer? Because already we have Anna and Yolande competing to get to that African consumer and give them access to finance. I should imagine for all companies moving in there is stiff competition.
There is, and it's rising, and personified no better by Walmart's recent pending acquisition of Massmart. We see the increased formalization of retail on the continent, but at the same time, intense competition coming from the informal economy, as was mentioned. 80% plus perhaps of all transactions are their so-called informal, where informal is normal sort of situation. So I think, you know, what we need to see, you mentioned infrastructure. The cost of product, the cost of distribution is extremely high in this part of the world. As infrastructure becomes more enabling, as countries start to, we hope, become more collaborative around regional integration infrastructure initiatives, so we'll see deflationary forces come through into ultimate pricing of products. I think the interesting point for me, particularly on competition front, is with Walmart's pending increased, sort of penetration, increasing its sales footprint across the continent. Walmart, if Walmart was a country, it will be the 9th largest purchaser or exporter from China, the 9th largest. So Walmart effectively is bringing the China price to Africa, whilst at the same time competing with Chinese micro-entrepreneurs who are selling Chinese product. So the sourcing is the same. The question is the route to market is either formal or informal, but I think it's all on the upside for the African consumer.
Do you think there's a first mover advantage for these companies moving into Africa? So here's Walmart's targeting those informal consumers in Africa. Will they have that advantage?
I think there is an advantage in moving first, but you can also observe and be a fast second. So if you look at a lot of the consumer goods companies, what they've done that's very interesting is package things down. So those strips of Omo that you see in the shops, where you're effectively paying more for less. So the amount you actually outlay is smaller, but you might pay a slight premium for that small packaging. And I think the interesting thing for financial services is how do you take that learning from consumer goods and also from telephony and apply that to other areas? How do you take that more for less thinking and put it into banking?
So how do you?
It's a very, well, we've actually, you'll see we've lifted quite a few, with prepaid cards, for example, is a very strong lift from the concept of telephony, where you've got the prepaid cell phone contracts. So it's looking at that and taking those ideas, and you might want to talk a little bit more about that.
Yeah, I think what we're seeing is, mobile money originally started as pure remittances, moving money from one end of the country to another. But the innovation that we're starting to see is exactly taking those type of consumable or bite-sized concepts and turning them into financial services. So we're talking, originally it was microfinance, now we're talking micro-savings, we're hearing concepts about micro-insurance, which is smaller prepaid models also becoming very predominant. So definitely a lot of innovation utilizing learnings from the consumer space.
Is this replicating what we've seen on other continents as they've reached the stage of development where Africa is at the moment, Martyn?
We're seeing it very much. Of course, China's somewhat more ahead of the curve, as is India, but not too different from Africa. India particularly, highly fragmented economy, not one single market at all. Very sort of, very varying degrees of education, of information available for your typical consumer. So I think the challenges in India typically are not too dissimilar to those of Africa. Maybe we're even more fragmented here. But you're selling product in highly, very fragmented, heterogeneous type environments. China is somewhat different.
How about the strength of the African consumer? Because you mentioned a couple of markets, and I know in South Africa, highly indebted, I think 80% of disposable income is debt. Are other African countries in similar positions? Do they also have high levels of consumer debt?
Well, what we're seeing is quite different across the markets. So again, Nigeria and Kenya, we're seeing that most consumers are saying that they will spend the same or more. 60 to 80% saying they will actually increase their discretionary spending in the next 6 months. Whereas in South Africa and Morocco, actually, most people are saving or spending less. So I think the behavior is quite different depending where you are on the continent.
And we also have varying degrees of growth. So we talk about average growth of 5.5%, but some countries growing a lot faster than that and some a lot slower than that.
I think we are seeing definite kind of target countries or sweet spots being identified by companies and those being moved into first. I think West Africa, Nigeria being one of them, the East African region. So, and I think a lot of that was enabled through enhanced technology. I think the East African cable made a huge difference to the competitiveness of the East African region. So absolutely yes, and we have to see where governments are coming to the party to assist with that kind of growth as well, because I think they play a very big role in enabling the environments as well.
So is it important then, Martyn, for companies that are targeting Africa to actually look at the policies that governments have in place in specific countries, particularly those business-friendly countries?
I think, again, the regulatory challenges are always, for any sector pretty much moving into African countries, are always there. I think going forward, the Africa Development Bank released a statement yesterday, I think it was the day before, that predicting African growth in light of instability in North Africa will drop below 4%. We're looking maybe 3.7% AFDB prediction. So I think we need to be careful. I think increasingly as the continent moves forward over the medium term, we'll start to differentiate between which economies or which regions are winning economies, again, as you say, business friendly, and those which are perhaps faltering. We'll start to differentiate a lot more between the respective countries and regions. And I think regulatory issues is one thing, but also political risk is another. We need to look as companies to position from a retail perspective or distribution, where are the hotspots of growth? That's what's important. And are those politically sustainable? A crisis in North Africa has caused significant damage, over the short term at least, to consumer markets. What about other countries in the region? We must not become oblivious to risk in this part of the world.
How do you view that, Anna? Because I know that MasterCard does do consumer sentiment surveys across the continent, and you have included a number of African markets into that survey, including South Africa. Are you seeing hotspots for growth there?
Yeah, I think it's again the same names that we've mentioned before. So on a scale of 1 to 100, Nigeria actually tops the world in 94 for consumer confidence and exuberance about growth. Kenya is similarly very highly placed. South Africa cautiously optimistic, around 55, so only just really topping that optimism score, and it's the lowest score that we've seen since we started our index. Morocco also much more on the cautiously optimistic side, as you would expect, looking forward. We obviously do business in North Africa, and we've seen the impact of the recent political changes on our business, yes.
And just from your perspective, how do you take it forward from here? Where are you targeting, where are you moving, and where are you seeing the big opportunities?
I think you've seen quite a lot of noise recently in the market around FirstRand's move into Africa. I think we'll be going live in Tanzania with our first branch in the next month or two. Definite interest in Nigeria. The recent deal has fallen through, but I think that hasn't stopped our interest in that region. So definite focus on Eastern and Western Africa and taking it from there.